A typical stock trading mistakes. A typical stock trading mistakes. We are on a monthly chart of Vols Spar Corporation, EPIC VAL, Victor Alpha Lima. This is a Russell 1000 component. And we want to discuss a typical stock trading mistake. All right. One of the typical stock trading mistake is to buy or sell, okay, because the price is at a key level. As you can see on my chart, the price is at 138.2% Fibonacci extension level. A typical stock trading mistake is for a day trader or a swing trader or a position trader to sell, okay, because a financial instrument rose to a resistance level. All right. Another thing that I want to clarify here, that we have a volume spike here, we have a tall candlestick bar, and the price is at a resistance level. All right. Very often, when traders see a volume spike and a tall candlestick bar, they assume that the bullish momentum is now finished. All right, so they will expect to sell the stock for no reason. It is a typical stock trading mistakes. All right, in order to avoid that typical stock trading mistake, is to highlight that resistance. So we see a volume spike, a price rose to a specific key level, in this instance 138.2% Fibonacci retracement level. In order to avoid that typical stock trading mistake is to give priority to a bullish signal above that resistance level, and to give priority to a bearish signal below that resistance level. So instead of selling straight away because the price has rose to a resistance level after a volume spike and sell straight away, one should, okay, give priority to bearish signal below that resistance level, and okay, implement a top-down trading method. All right. Another typical, in another, to put it to you in a different way, a typical stock trading mistake is that we see a volume spike and a tall bullish candle. Trader will assume that the stock will definitely go up. All right. So here you see a tall volume bar, okay, and a surge in a bullish momentum. Traders say that definitely this stock will go up because we have a bullish tall candle and also a surge in trading volume. It is a typical stock trading method. The best approach is to give priority to bullish signal above that key level, and okay, to give priority to bearish signal below that key levels. All right. So as it looks now, it looks more bullish because we have a surge in trading volume, and also we have a volume spike. In the old days, traders or an investor will go and buy this stock straight away because they see a tall volume bar, okay, and also a tall bullish candlestick bar. So the assumption is that this stock will go up. No, one should not assume that the stock will definitely go up, but one should, okay, be ready to sell and be ready to buy by drawing the key level. Sometimes that key level is hidden. As you can see here, there is no resistance on my left hand side, but there is a hidden resistance level, which is the 138.2% Fibonacci extension level. In fact, the 138.2% Fibonacci retracement level is a very powerful Fibonacci extension level. If the price breaks above a prior high and hits the 138.2% Fibonacci extension level, one should give priority to bullish signal above above that 138.2% level, meaning that the price breaks above the 138.2% level, retest it and find a support, and one will implement a top-down trading method. That's the best approach. So you can see after the tall candle, a tall volume bar, a volume spike, the price quickly rushed to the 138.2% Fibonacci extension level. Will this stock continue to go up or will it go down? By using a top-down trading method and giving priority to bullish signal above and below that Fibonacci extension level, one can avoid a typical stock trading mistakes. All right. So looking at this volume bar, okay, and the top bullish candlestick bar, many traders right now will buy this stock. If the financial continues to go up in a normal progression and break below the common central line, we have a bearish trading setup. On the other hand, if this stock, okay, Valspar Corporation, Russell 1000 component, breaks above the level of 11061 and break above and retest the final support, we have a bullish trading setup. In all cases, in order to control the risk, one must use a top-down trading method. It is not because a stock has risen from one point to a resistance level that one should sell straight away. All right, the price can break above that resistance and find a support. If that is the case, we will implement a bullish strategy, a bullish top-down trading method to trade it. But if the price continues to go up in a diagonal move and break below the common central line, then we have a bearish trading setup. Anything is possible at this point in time, and one cannot, okay, assume that definitely this stock will go up or down. All right, this is a typical stock trading mistake. You will see this okay, trading setup on a weekly chart, monthly chart, hourly chart, and daily chart. So do not assume that the stock will definitely go up and go down. The opposite is also true when we see a volume spike, and also we see a long, a bearish candlestick bar bringing the price to a support level. It does not mean that the stock will definitely continue to go down because we have a surge in trading volume and a long candlestick bar. The best approach is to draw that support level, give priority to bullish signal above that support level, and priority to bearish signal below that support level, meaning that the price will dip below that support level, retest it, and find a resistance, or the price may continue to go in a diagonal move. If the common central line is broken and a candlestick bar close above that okay, common central line, we will implement a bullish top-down trading method. If you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. In all cases, we recommend to traders to use a demo account to test and retest this method before going live. This is about a typical stock trading mistakes. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders.